Hi, thank you for taking the time out to watch this short video. I'm Brendan Brown from USA Property Investment, and I'm going to be sharing with you why I'm buying property in the States right now and why some of my friends and colleagues and clients are buying property in the States right now. If any of it makes sense to you and you want to find out more, we're going to be hosting a USA Property Roadshow in Joburg, Pretoria, Cape Town and Durban at the end of this month, which is May 2012. Where we'll be going into much more detail and showing you exactly why and how to go about investing in the USA for maximum growth with minimum risk. If you want to join us, there's a booking form below, but I'll get to that in a minute or two. Just quickly, I want to share with you the 5 main reasons why I'm buying property in the States right now and why my clients are buying property in the States right now. We bought one last year and I'm in the process of buying another 2. But the bottom line is I can't buy all the good deals. I don't have enough money. There are just too many of them available. And that's kind of why my business exists. If I can help others benefit from this incredible opportunity, at least I believe it's an incredible opportunity, maybe the universe will somehow see to it that I get to benefit from it too. So before I get right into it, you probably want to know why the Americans aren't buying up a storm right now themselves. And the answer is multifaceted, but it boils down to this. Can you imagine if you owned a property worth 2 million rand and in a year it dropped in value to 500,000 rand? Your bond is nearly 20,000 rand a month, you can't sell the house as the banks have no money to lend anyone anyways, and then on top of it you lose your job. So the bank forecloses on you, and because so many of these are happening everywhere, the banks are finding it difficult to hold anybody accountable for the difference between the sales price, what they actually get on the auction, and the outstanding bond for that foreclosed home. So you lose your home and the equity in it, you lose your job, your credit is shot to hell because you've been foreclosed on, your stock portfolio is in the trash thanks to the global financial crisis caused by this housing crisis, the subprime crisis. So you have no backstop, and to add insult to injury, the IRS steps in. You see, the minute the bank writes off the difference between what you owed and what the property was actually sold for in auction, it's seen as a gift or a donation to you in the eyes of the IRS. So you have to pay tax on it. So to put it bluntly, the American people are psychologically battered by the housing crash and the global financial crisis and everything that went with it. There are a few smart cash flush investors, but for the most part, even though interest rates are insanely low in the USA to stimulate the housing market, the locals simply aren't buying. The foreigners see the opportunity though. Even Warren Buffett, who has never stood behind property as an investment, came out on Squawk Box a couple of weeks ago and said if it were practical to manage, he'd buy hundreds of thousands of residential properties in the USA right now. He says it's undoubtedly the best buyer's market we'll ever see, and I believe that intrinsically. An Australian hedge fund, for example, has raised $100 million to buy in only one suburb of New Jersey. Can you believe that? Okay, so to get into why I'm buying, those are a couple of little reasons. I want to go into the main reasons. I want to run through these 5 main reasons, which are my top reasons, but there's a host of other reasons that back up my decision, which I'll go through on the USA Property Roadshow. But let's get started. Okay, number 1. Buy at the bottom, not at the top. What does this mean? The Case-Shiller Home Price Index, which is about the leading market indicator of the home prices in the USA, says that the home prices on average have dropped about 35% over the last 4 to 6 years, from 2006 till 2012. So call it 6 years. So they've gone, if you have a look at the graph here, this is just a bit of an indication, my drawing's terrible, but they've gone from 2000 to a peak year on average of $225,000, and they've dropped to about $150,000. On average. So that's about 35% drop. What we're actually doing is we're finding properties way below there. If it was at $225,000 in 2006, we're buying them right now for between $50,000 and $60,000. So we're finding them way at between 30 to 40% below their peak market value. So what that is an indication of is that the curve has happened, where the market has dropped right down here, and it makes sense. You don't buy up there where it's at the peak because there's no money to be made. You buy here at the bottom where it's got space to move back up. And what we're seeing in the market is that it's starting to hover at the bottom of the curve there, and it's starting to show signs of, and indications of slowly turning back up. So it means we're at the bottom of the curve and we're buying at the right time. Essentially, you make your money when you buy, not when you sell a property. So number 2, income is more important than capital. What's so important about this is, if we have a look, if you're buying a very low price property over here, so you're investing your money and you're hoping for capital growth, but capital growth is that big maybe figure in the future that might never happen. I mean, people have played on the capital growth investment scenario for a long time, and a lot of people burnt their fingers because they negatively geared themselves and they had to pay in all the time. So if the income is not good by itself, don't rely on the capital growth as the only play. So look for income before capital growth. That is the most important factor. Now, the yields that we are getting in the USA are anywhere between 10% and about 25%. So 10% to 25%. In fact, there's a couple of investment opportunities that we're getting in North Dakota, for example, where they're saying that they can get up to 45% yields. But it's a bit of a risky scenario, so I don't really recommend it to clients. But we've got it there, and we can look at it for specific clients who have a particular need or a risk appetite. But where there's good quality tenants with good quality properties in good areas with high rental demand, we are getting between 10 and 25% yields, which is phenomenal. And it's continuous and reliable yields. That's what we can get. Reliable income. So the fact of the matter is, if you're laying out $40,000, $50,000 on a property, at least you can rely on the income generated by that property to give you a very good return on your investment. Another quick question is what's driving the rental demand? I spoke about a person who got foreclosed on earlier as an example. Now imagine there are hundreds of thousands and millions of people that have been foreclosed on. That is our rental pool. The bottom line is these people were underwater on their bonds. They had to be foreclosed on, and a lot of them got their jobs back and had to either move in with parents or move in with other family and that type of stuff. But slowly they're entering back into the market and they're coming right financially. And the people that we find as tenants have jobs. They are reliable people. They pay their bills on time. And because of the structure of the USA laws, we as landlords are protected as much as the tenants are protected. Not very much like South Africa, where the PI Act kind of acts in favor of the tenants more than the landlords. In the USA, you're as protected as a landlord as the tenant is, which is very, very powerful. Number 3 is earning first world currencies and spending third world currencies. What I mean by this, we here spend in rands, and usually we earn in rands. But if we could earn in US dollars, what would the difference be over the long term? Now, I went on to NetDania. You can get this information for free on netdania.com. That's a graph of the rand versus the US dollar over the last 16 years. It kind of gives you an indication. If we had to draw a bit of a trend line there, we can see what's it doing. It's going up. If we look at that, we can see that the rand has gone from 4 rand to the US dollar to over 8 rand to the US dollar in the last 16 years. Now, I don't have a crystal ball. I don't know what the currency is going to do in the future. Well, I do know it's going to go up and it's going to go down. So what we can do, though, is take that history and say, what are the chances of it going further up or further negatively against the rand over the next 16 years? And just to put that in perspective, in the last 2 weeks or so, the rand dollar has fluctuated quite dramatically, and it's dropped right down to around 8 rand 40 to the US dollar from roughly 7 rand 80, 7 rand 90. So that's quite a substantial drop in currency in a very short space of time. But over the long term, that's what we want to look at, the trend over the long term. We don't want to look at the immediate monthly movement because that's too volatile. But over the long term, we can see that our rand has halved in value to the US dollar. So globally, we've become half as powerful wealth-wise over the last 16 years. So if we extrapolate that and predict forward what might happen, is it possible or probable that the rand would go from 8 rand to the dollar to 16 rand to the dollar over the next 16 years? And I think, yes, that's pretty probable. We have a whole bunch of incentives here in South Africa because we're so reliant on our export of commodities and minerals and gold and that type of stuff that we have to have a weaker currency because our whole economy relies on a weaker currency in global terms. So we do very well when our currency gets weaker. It's a bit of a balancing act, but on the whole, South Africa is better off when we have a weaker currency. So when we are incentivized to devalue our currency, it means that what's probably going to happen is the US dollar will strengthen against our rand. If we look at the euro crisis that's happened over the last, well, 5-6 years, but very, very intensely in the last couple of months with Greece and France and Germany and everybody in trouble over there, it all affects our rand because we are an emerging economy. And every time they're in trouble, we take a hit on the rand. It makes no sense, but that's because our rand is based on perception. The investors exit our rand, which then devalues our currency because of a crisis on the other side of the world. So anyway, the probability of our rand changing is very, very strong. What does this mean? It means, one, our rental returns in South Africa in rand terms will increase because of the devaluation of the dollar. At the same time, if we're getting slight capital growth over the long term, not that I ever rely on capital growth as a measuring tool because it's that maybe figure that might happen in the future, but if we do get that capital growth in dollar terms, it's compounded by the effect of the rand dollar weakening. So if you're earning in dollars and you're spending in rands, you're just winning all the way to the bank. Another big factor about where we're at with the rand and the US dollar and currencies and all the rest of that is never before in South Africa have we been so empowered by the Reserve Bank to be able to move money overseas freely. At the moment, we can move up to R1 million without a tax clearance certificate, and up to R4 million if you're going to apply for foreign investment for a tax clearance certificate with the Reserve Bank, and you'll get it. And if you want more than that, it's just a procedure that you have to go through. So we are empowered as individuals to be able to play on a global field like never before, and we need to take advantage of that. We've got to look at the best opportunities that are out there in the world to offset our risk here in South Africa, so we can earn first world currencies while living in a third world environment, which is fantastic. That's why I live here. I love living in South Africa. It's wonderful. The weather's great. It's just a fantastic country. I love the people. So to move on, number 4, seeing is believing. We went across there last year. It was about April, May time in 2011. And the opportunities were phenomenal. That's why we bought so quickly. We set up our LLC, which is a limited liability company. We got registered for tax in the USA, opened bank accounts, went through that whole process, which was quite document intensive and time intensive and all the rest of that stuff. But I could see that it was worth it. We had to buy in the USA because prices are, insanely low. If you can buy at 60 to 70% below peak market value and up to 50% below replacement value, below actually being able to build that property right now, you can buy it for half the price of that, which is crazy, crazy, crazy value. So I could see that opportunity and I wanted to move quickly. And last year, we did move quickly. We bought our first property there. And now we went back. Now at the end of April, myself and Scott from International Property Solutions and Neil Peterson from Real Estate Investor Magazine, we went over to go look at 8 different cities across 8 different states, roughly. Well, we went to Phoenix, San Diego, Memphis, Atlanta, Orlando, New York, New Jersey. Quite a few places that we evaluated and met quality, experienced people on the ground over there. And the opportunities that we saw were unbelievable. If I had bajillions of dollars, I'd be buying up a storm right now. So I'm all in on USA properties, and I'm hoping that I can really help other people purely because I went there, I looked, I saw, and I believe. So seeing is believing. Walking through those properties, seeing a house that is 4 bedrooms, 5 bedrooms there in Atlanta going for $70,000 to $80,000. It's a property that if I looked at it here in South Africa, I'd value it, just around 2.5, 3 million rand, and you can pick them up there for $70,000, $80,000. So very, very, very good value in my eyes. And when I walk through those properties and I see that and it's real and I can buy it right there and then for that amount of money, I get excited. So there's very good value to be had, and I went there, I saw it, and I believe it because of that. And that brings me to the top point. I believe it's the greatest wealth transfer we will ever see in our lives. So what I'd like to do is I'd like to show you all of the details around why I believe all of this stuff. And it's going to take a couple of hours, about 2 hours. And we're going to do it on this Property Roadshow to educate as many people as possible so that they can take advantage of this. You don't have to buy anything on the roadshow. You can come, you can listen, you can learn, and you can leave, and you can go and buy on your own. As long as I've helped somebody benefit from this, I'm happy. There is a small cost involved for the roadshow. It's 200 Rand just for the breakfast and the venue. So you can book below, and please do. I'll love to see you there, and then hopefully I can help you buy property in the USA. But if not, I really hope you buy anyway, because it's an exciting time to be buying in the USA. And I believe that if we compound all of these, buying at the bottom of the graph, not at the top, getting really good rental income while we wait for the inevitable capital growth, earning in first world currencies, not in third world currencies, and actually being on the ground and seeing that the opportunity exists in real life, in real terms, I believe that that builds up to the greatest wealth transfer we will see in our history. And as South Africans, we are uniquely positioned to take advantage of that, because we live in a third world country and we've never had the freedom before that we have now to be able to move so much money overseas and take advantage of opportunities that are on a global level. So I'm excited. I really want to share the information that we have to share with you. You'll be able to see properties that we've evaluated. You'll be able to see some of the pitfalls on why we go over to meet the people that we meet, damaged properties, bad tenants, bad management agencies. Learn a little bit about what the pitfalls are that you need to be aware of if you're going to be investing offshore, and how we go about overcoming those. So there's going to be a lot of information there. So please just fill in the form below. You'll see that there's a whole bunch of links there. One for Joburg, one for Cape Town, one for Durban, and then one for Pretoria. So if you're keen and you want to learn more, please just fill in the form. It's going to cost you 200 bucks. And if you don't learn anything, if you don't think that 200 Rand was valuable enough, I'll give the 200 bucks back to you. So that's my personal guarantee to you. If you don't find it valuable, I'll give you 200 bucks back to you, and you can do whatever you want to after that. So I'm quite excited. I hope to see you there. Thank you very much. Bye.